Thanks everybody for joining us today. For those who haven't had a chance to meet me, my name's Ricky Bryan. I'm the business manager here at IAHA, and this is the first in what we expect will be a series of all about the business webinars to I suppose help skill up that side of things that a lot of our members have told us that they're looking for professional development in terms of you know, training to be an allied health professional. Sometimes you can actually end up having to operate your own business in one way, shape, or form. So this is sort of our response to that. And yeah, over the course of the next year, we'll be a series of these along different topics. To start off with, I'd just like to acknowledge the traditional owners of the country that we're meeting on here today, here in Canberra. That's Ngunnawal and Ngambri people. Obviously, you're all around the country. If you want to give a shout out to your country on the chat along the side, we'll give a shout out to it. We recognise the continuing connection to the land, waters, and culture, and we pay our respects to the elders past, present, and emerging. And obviously, I pay my respects to any Indigenous people that are joining us here today. And of course, we know there are many there. So please allow me to pass on my respects. Introduce Roehl, a former, I suppose, colleague of mine when I was working with as a non-for-profit Indigenous business that does a lot of work with other Indigenous businesses and capability building, especially small and micro businesses. Roehl's a chartered accountant, so he knows what he's talking about, I hope. You do, mate, you do. So he's come along today as our resident expert. I'll let you introduce yourself, Roehl, and then I'll fire up the PowerPoint.
Yeah. Look, Ricky's already said it all. I'm old, so I've had a lot of experience making mistakes and learning. So I'm going to pass on the learnings that I've had in all those years, and hopefully you'll find it useful. Probably it would be great if after the event or after this presentation, if you could provide feedback to Ricky as to how you think it went, so that if there's anything that we can improve on, we can refine it for future presentations. So that's all I'm going to say.
And Roehl a hand out around too. And Kimberly's giving a shout out to you, Kimberly, on Gadigal country. We'll keep doing that as people shout out. I will fire up the PowerPoint.
Yep.
Well, I'm learning here with the technology too, so bear with me.
So while Ricky's doing that, I just want to let you know that in my PowerPoint presentation, you will see some names of companies that I'm using as an example. So I want to emphasize that those are examples only. They are not meant to be taken as an endorsement. I'm not getting paid by anybody in doing this presentation, so please, they're just by way of example.
Yeah.
So here we go. I started.
We can use that to click through.
Right. So today we're going to talk about business basics on how to set up a business.
Can't see the chat now.
Okay.
So everybody now see the chat along the side.
Is there any way you could put it to the side?
Yeah. So.
Or can you see?
Yeah. I suppose if we can't see the chat, then we'll hold any questions till the end.
Okay. We'll hold the questions till the end. Alrighty. Okay. So today what we're going to do is talk about the four types of business vehicles that you can use to run a business, and we'll start off by looking at sole traders, partnerships, trusts, and companies. So what is a sole trader? Well, a sole trader is a business owned by a single person, probably the most common vehicle used by small businesses. The advantages of it are it's simple to set up, it's simple to dissolve, it avoids the expense of forming other vehicles such as companies, which means that, which requires you paying a lot of money to an accountant, for example, if you don't know how to do it. And there's no need to file a separate tax return for the business. The downside is that it's limited financing, because as a single, you're the provider of the funds for the business. You have unlimited personal liability as well for all the debts of the business. And you cannot raise capital from investors if you decide that you want to grow your business. You can only borrow from a bank. And that in itself is limited by the property that they can grab hold as collateral. And it's taxed at personal tax rates, which rises to greater than 27.5% for any income greater than $37,000. The significance of the 27.5% is that if you're a small business proprietary limited company, that entity will only get taxed to 27.5%. And as you know, depending on how much you earn, you can get taxed all the way up to 45%. And the business will cease to exist when the owner dies or ceases trading, so it's not in perpetuity.
The audio is gone again, so.
Okay, so partnership. A partnership is a form of business where there are two or more partners that actually get together, form a partnership agreement to run a business. The positives of that is that partners can now provide additional finance to set up and run the business. It is still simple and flexible, and partners can share the load of running the business. The downside is there is now an additional tax return for the partnership. And also, what that means is that the partnership itself will have to pretty much lodge a tax return, and in addition to the individual partners' tax returns as well. There's also a loss of control because now you're sharing control of the business with somebody else. And if you don't know that person very well, there could be disagreements. So can they hear it?
That's right.
Okay. Each is exposed to the liability created by the other partner. That's also another downside. So say, for example, if one of the partners of your business actually does something not very ethical and gets himself in trouble, you could be liable for whatever he or she did as well. So that's a downside of partnerships. Trusts. Now, trust is a very complicated business vehicle, and it's pretty much run for the benefit of the beneficiaries. So a trust has got two components in it: a trustee that runs it, and the beneficiaries that receive the funds and the benefit from the business. So the upside of it is that income can be distributed to the beneficiaries and taxed at their own personal income tax rates. So you're able to spread your income. It provides more privacy than a company because the transactions of a trust are not legislated to be lodged anywhere in the domain. The beneficiaries do not own the trust assets, so it's actually the trustee that owns the trust assets. So there's scope for protection from a beneficiary's third-party creditors. So, for example, if something happens with one beneficiary and they go under for some reason, the trust who runs the business is protected, so the business is protected. The downsides, as I said before, it's far more complex and therefore it's more expensive to run than even a company, for example. It's more difficult to borrow funds because of the complex nature of the trust vehicle. You cannot distribute losses on only profits in trust. So at the end of the year, if the trust have made losses, you can't distribute that to beneficiaries so that they can offset their income to it. You can only distribute profits. And all profits need to be distributed to the beneficiaries, otherwise the trust is the highest rate for any undistributed profits, which is around about 45%. Now, it's also hard to grow a business this way because you cannot retain any of the profits to actually use to grow the business. And the fourth and final vehicle in here is a company. So a company is a legal entity formed by a group of individuals to operate a business, but in this case, it is registered in the Australian Securities and Investments Commission, and it's given a unique Australian company number, or ACN. Now, the upside of this is that the owner's liability are limited. So if you actually are the owner, what is required of you is to put in some money into the company initially, and that could be by buying a share for $2 or $1. If the company goes under and you're the owner, you're bound to lose only $1 or $2, depending on what you paid for the share. It is easy to sell the business, either to raise money or to sell the business outright when you're done with the business. The tax rates are capped at 27.5% for businesses with sales up to $50 million. Anything greater than that, and it rises to 30%. You can carry forward losses. That means if you do make a loss one year, the following year, you can offset it against any money that you make, and therefore you will only pay you'll only pay tax on the net result for after you offset your profit against your loss. And finally, you can retain profits to grow the company. So you can start buying things, including offices, company assets such as motor vehicles if you need them, and so on and so forth. The downsides: it's expensive to establish, maintain, and wind up compared to a sole trader running on their own. More administration involved with tax office and state-based reporting and lodgements. The company's details, which are the trading details, are also public, in the sense that they are asked for by ASIC, and you have to lodge them in ASIC, and anybody can actually ask for it. And finally, the directors of the company are personally liable for the company's debts. Okay, so just going back to this. So in this presentation, we're only going to deal with 2 of these 4, and that is the sole trader and the companies, because they're the 2 most commonly used vehicle by people who run businesses. The other 2 are actually a bit complex, or they have downsides. Like for the partnership, you can get actually you become liable for somebody else's problems. So we'll start off by going setting up a sole trader business. So the main steps of setting up a sole trader business is as above, and we'll go through it in the following presentation, but we'll just quickly run through it. So you apply for an ABN, you register for GST, you apply for pay-as-you-go withholding, you register a trading name, you take out insurances, and you set up your own superannuation. There's the business activity statement and the installment activity statement returns. Then you've got a pay-as-you-go installment, income tax returns, and payroll tax. That's a long list, but not all of it will potentially be applicable to you depending on your business trading circumstances, and I'll go through that in the next few slides. So let's deal with the tax office first. So with the tax office, there are a few setup steps that involve these organizations. The first one is applying for an Australian business number, or ABN. So to apply for an ABN, you actually have to go to the Australian Business Register website. Now, I can't show this to you, but you will get it as part of the handout, because the website details are actually in the notes that will come across. Now, when you get into that website, you just literally follow the online instructions. However, before you go to the website, what you need to have in front of you are the following things. You need your tax file number. And if you have had an ABN previously and you closed it down, you need that ABN number as well. Now, you also need the date that you need your ABN to kickstart. It could be a date that has already gone past, or it could be a future date. So it depends on when you're starting the business. Now, the only thing is that it cannot be more than 6 months into the future when you apply for your ABN. So if your business is, going to, don't bother. Don't worry about it yet. You need your legal name. So if you've got a business name that you registered, you're going to need it. You need to have the details of the authorized contact. So if there's additional people other than yourself, you're going to need to have their details. And you're going to need the address of your business and its contact details, including postal address, email address, telephone numbers. And you're going to need the business activity, the description of your business activity. Usually, this is the main source of income for your enterprise. Finally, you're going to need your business location. Now, you're going to need to provide the premises of your business, so your address, etc. However, If there's a risk to the safety of individuals as a result of disclosure, for example, if you're running a women's refuge, then exempt from disclosing that that address. Right. So the next one in there is registering for goods and services tax. Now you might say, well, hang on a minute. What's the difference between an ABN and a GST? Okay. So once you've got an ABN, you can operate a business that could earn up to $75,000. If you think you're going to earn more than $75,000, then you need to register for GST. Now, what that actually means from a practical sense is that when you raise invoices, then it has to be labeled tax invoices. If you do not have a registration for GST, which means on the other side that you're not going to earn more than $75,000, you can just issue an invoice, any invoice. It doesn't have a tax invoice compliant invoice. All right. So once you've worked out that you need to register for GST, then you need to do it within 21 days before you exceed that $75,000 threshold. And you can backdate your GST registration, but that is limited to 4 years, prior to the time that you are applying for the GST registration. And how do you do that? So you go into a business portal in the tax office at the ATO website, and basically you log in the business portal using either a MyGov ID or a relationship or authorization manager. All of this is explained in the ATO website, and I'll give you in the notes the links to these things. You can also log in using your OSCE, or you can log in by managing your ABN connections, also your account. Alternatively, you can phone the ATO hotline, which is 132866. Don't worry about remembering those numbers. It will be given to you. Word of warning, though, every time I ring that number, you're going to have to allocate at least an hour of your day before you get through. Or number 3, you actually engage a registered tax or BAS agent who will do it for you. But obviously that will cost money. So that's what you need to do in terms of registering yourself for GST. When you do it in the website, it's actually quite easy, and it is done literally instantaneously, and it doesn't cost you any money. Righto. Applying for PAYG withholding. Now, this is one of those applications that you only need to do, and your business is only ever going to need if you're planning to have employees. Traders can have employees, they're allowed to. And if you are going to employ someone, you are then obligated to withhold the tax from their salaries. And that's what this is, PAYG withholding. And these tax then mean that you're going to have to lodge installment activity statements as well as business activity statements. And I'll cover those returns in a future slide. Now, in terms of how do you apply for PAYG withholding? Well, it's the same thing. You're going to have to go through the business portal in the tax office website, or you can go through your registered tax or BAS agent, or you can use your standard business reporting compatible software. What that is if you're running, for example, a Xero software, accounting software, or a MyOb accounting software, or a Quicken accounting software that is linked already to the tax office, usually it facilitates do this through that software. Or you can phone the business line in the tax office, the same one as the number that I gave before, or you can download and complete a form called N802954. And again, I've got a reference for where you get that form in the notes that you're going to get. And that's how you pretty much actually register for pay-as-you-go withholding. Now, once you've done the registration, there are a few reporting obligations that you have to the tax office. And paramount to those, and you've heard it before, is the business activity statement. That's the BAS. And also, and I mentioned before, installment activity statements. That is only necessary if you employ people, because that's where you actually have to lodge that to pay the tax that you withheld from the salary that you pay to your employees. Still with the reporting for the BAS, and there are 3 cycles. If you register for ABN and GST, you have to actually send in your BAS returns every quarter if your annual income is up to $20 million. If it exceeds $20 million, your BAS reporting will go up to monthly. So instead of quarterly, you're obligated to actually do it monthly. Now, if, however, your income is less than 75%, and you only voluntarily registered for GST, even though your income is below the threshold, then your BAS can be lodged annually. But like I said before, the installment activity statements has to be lodged on a monthly basis. So how do you lodge, and what are your options for lodging your BAS and installment activity? Well, there are 3 ways. You can lodge online by using MyGov, and again, my notes will give you the link to that, or through the business portal. Again, there's a link to that, or through your software, accounting software like Xero, MyOb, or Quicken, if it is actually linked and it has that facility, because some of them, the most basic ones, do not, but most of them do have that link to the tax office, and you can just do your lodgement through those software. Now, how do you pay your BAS payments? Well, the quickest and easiest way to pay your BAS and IAS is through BPay or a credit or debit card, and that can be done, as part of the lodgement, process. You can also pay using a payment reference number if you lodge it online. Right now, the last is the return. So these are personal income tax returns. So when you run a sole trader business, the tax return that is involved is the income tax return. Now, as a sole trader, your business's income and expenses will go there, and you can lodge your income tax return online. And I've got my, the reference site for that, or through your tax agent. Now, I want you to know that as a sole trader, if you originally, before you started the business, lodged your tax return using paper by downloading the paper form and filling it in, if you run a business as a sole trader, you won't be able to do that anymore. And the reason being is that part where you actually enter your business activities information for income and expenses, they are no longer printed. The tax office don't print them anymore. If you're running a business, they tell you to actually go to My Tax and fill in electronically. Now, before I leave the income tax returns, there is another thing that you need to know. There is a thing called pay-as-you-go installment. Now, pay-as-you-go installment kicks in after the first income tax return has been lodged with your business details in it. Because what happens is the tax office will look at it and say, oh, your business has earned this much money, which means your tax liability that you have to pay for that year is, let's say, $1,000, right? Now, what then the tax office does is it goes, oh, well, seeing that you're running a business, as part of your quarterly BAS return, we're going to estimate your installment for your business's income tax, and we will give you that number. And every time you pay your BAS, there'll be a number to be, that you include for that, and that's called a PAYG installment. Now, as the tax, in this scenario, let's say, for example, $1,000, they will chop that into quarters and probably add 10%. Don't hold me to it. The percentages change all the time. So you might end up being asked to pay $275, say, for example, every quarter along with your BAS as part of your PAYG installment. However, sometimes they say, oh, instead of an amount, you can actually, they will use a percentage of your income. And they will say, use this percentage. So every time you lodge your BAS, and you say, I earned $1,000 this quarter, there's a percentage that they'll give you to apply to that works out how much you have to pay for your PAYG installment. And at the end of the year, when you lodge your income tax return, when they work out, let's say, for example, at the end of the next year, you're now needing to pay $2,000, but you've already paid $1,000 as PAYG installment, then you'll only be obligated to pay the extra $1,000 on top of that.
Roehl,
Yep.
if you'll permit me a question.
Yep.
I think when we were preparing this is the section where you were saying it's actually what's quite important that if you're running your own business as a small business, one of the things that you can get caught on going from being a wage earner to this phase
Yes.
is making sure that you've got the money aside to pay your tax. Yeah,
that's correct. And that actually, that's a very good point, Ricky. So there's two avenues in here that you can use to actually make sure that you have enough money to pay your tax. Every time that you do your BAS returns, you look at the BAS return, and it will say, okay, you're going to need to pay this. Some of the small businesses actually set up another bank account just to put the money for the tax in that bank account. So they, for example, send an invoice and gets paid by a customer, and let's say, for example, they sent an invoice for $1,100 for their services, and $100 of that is actually BAS, GST. When they get that money, they automatically transfer the $100 to another bank account that they hold for the tax, so that they don't accidentally spend that money. So that's one strategy for actually, making sure that you have the money to pay when the tax time comes along. Right. So registering a trading name, why would you do that? Well, for some people, they need, it's a way of marketing themselves. So a trading name means something about them and is a way to actually, promote your services. There's three trading names in there. Put in there a quote from Jay Danzy that I really like, because in reality, the best trading name that I know of in business development, I suppose, asset that each and every one of us has is that. Okay, how do you register a trading name? You go to the Australian government's business registration service. That's it, and you just literally follow the bouncing ball. There is a cost to registering a trading name. And it varies from state to state, actually. But it's around about, for example, I just recently registered a trading name in WA for 3 years, and it cost me $75. So, that's an indicative figure. So the next thing you need are insurances. Now, usually, as a registered health practitioner, you'll be required to take out insurance, a public liability insurance. If you're employing people, you're going to need workers' compensation insurance. Really, I would encourage you to go and shop around. You'll be surprised how different these insurance premiums could be, and you could save yourself a lot of money by getting quotes. So go and shop around. The only thing that you're going to need when you shop around is you're going to need to know what the maximum cover that your professional association requires you by way of insurance cover, and if there are any special conditions that they require you to include in your insurance. Superannuation. Right. So being a sole trader, and let's assume for the time being that you do not have an employee, then the superannuation compulsory contributions really don't apply to you. However, I would encourage you to actually pay, to put something aside and set up or join an industry superannuation fund and set aside some money in there. Now, if you do have employees, then the minute that you pay for an employee more than $450 before tax per month, then you are obligated to take to pay superannuation guarantee charge for them. And the maximum or superannuation contribution per employee in the financial year ending 2020 is actually is equivalent to 9.5% of $221,080 per annum. Now, let me just clarify that. I did mention that there is a minimum of $450 per month. So that's $1,800 a year. So if you're paying somebody a minimum wage of $1,800 per year, pay 9.5% of that to their superannuation. Now, however, if you are somehow paying an employee greater than $221,080 per annum in this current financial year, then your obligation pretty much maxes out at that level. Say, for example, if you're paying somebody $500,000 per annum, you're not going to be paying 9.5% of $500,000. You're only paying them 9.5% of $221,080. Now, that figure moves every year. Don't think you'll be paying people that much money, so don't worry about it. And the other obligation is that these payments must be made to complying superannuation funds, and they must be paid on quarterly due dates, which are 28 days after the end of each quarter. So a complying superannuation fund is what the Superannuation Industry Act of 1993. And what that means is that any contributions made to it and any income it earns is only taxed at 15%. We're now going to move to payroll tax. Now, you all, as I've been told by Ricky, sitting around in different places in the country, and there are different rates and different thresholds for payroll tax. So, payroll tax, again, is only applicable if you're going to employ people. If you're not going to employ people, forget it. It's not going to, this is not something that you have to worry about. But as you can see from the table there, each state has got a different, have got different payroll tax rates and different thresholds, and they have different conditions as well. If you are going to pay payroll tax, you're going to end up having to go into the individual state government website to find out the details of how you register and how you pay. So that actually is the end of how you set up a sole trader business. And I will now quickly go to the company side. Now, you'll see that this list, there's some similarities to the previous one, the sole trader. I will not go through the slide that actually is the same as the previous one. Okay, so we'll skip those. So how do you set up a company? Well, first of all, you set up a company from an ASIC perspective, then you register a trading name, open a bank account, apply for an ABN, which is the same as before, register for goods and services, same as before, apply for a company tax file number, new, apply for a PAYG withholding, same as before, PAYG installment, and now here's another new one, registering for tax and lodging those returns, super, taking out insurances, BAS, IAS, income tax returns, and payroll tax. So let's get into it. So, setting up a company. You can register a company through ASIC, the Australian Securities Investment Commission. However, this process is really involved and requires a thorough knowledge of the Corporations Act and other relevant regulations to successfully navigate. So unless you know those things, I probably wouldn't suggest you do it on your own and save yourself, dollars. The easier way is just to purchase a shell company from company registration businesses. An example, there are 3 examples of which are in there. And they basically cost around about $800 to set up. Now, there are 2 main types of companies, a proprietary limited company and a public company. We're going to be dealing with proprietary limited company because that is the one that is used usually by most people. What are you going to need? The name of your company, the address of the company, the shareholders' names and details, directors' names and details, and Pretty much that's it, the secretaries and public officers. Registering a trading name, we dealt with that before, so I'm not going to worry about that. Opening a bank account, you will need to open a bank account for the company. It's actually important because you can't apply for an ABN unless the company has its own bank account. And you're going to need the tax file number as well when you do this. When you go to the bank, they'll ask you three things: the tax file number, the copy of the company's certificate of incorporation, and a minute of directors' meetings that authorizes you to open that bank account. Oh, sorry, there's a fourth one I forgot. Sorry, you're going to need your ID. We actually went through this already. This is the ATO registrations and applications. The only additional thing in here, which I'm going to cover, is fringe benefits tax. A fringe benefits tax is applicable if you are actually paying yourself, if you're going to salary sacrifice anything. So what would you salary sacrifice, for example? Motor vehicle. Say, for example, you salary sacrifice your motor vehicle, then you're going to need to register for fringe benefits tax, because that salary sacrificed item will be the subject of a fringe benefits tax return. It has a different tax compared to your income tax. So that is the only thing. And the notes that you'll get from me will actually run you through how you do that, because you can do it through tax agents, paper form, etc., similar to a lot of the other things office registrations have. Right, I will not go through the income tax return because that's the same. There are paper forms, there are online forms, there are all sorts of different returns with that. Superannuation we've covered. Now, just one thing that I need to actually say: if you're running a company, you're going to end up having to actually set this all up, because you yourself will have to be an employee of that company. So all of this now starts to apply.
So don't forget to pay yourself a wage.
Don't forget to pay yourself a wage, and don't forget to take off tax so that you then, lodge it as an installment activity statement every month. And the best is powerful. Of course, it's the same as what we did, sole traders have. And if you are actually salary sacrificing, then you have to lodge a fringe benefits tax return every year. Now, the only thing about the fringe benefits tax return that I haven't covered is a different year. Unlike an income tax year, which is 1 July to 30th June, it runs from 1 April to 31st March. And it's the tax office's way of trying to spread the load of all these returns. Okay, it causes some complications, but more often it becomes you get used to it. So superannuation, we won't worry about. Insurances we covered before, and so is payroll tax. And the last thing I have to talk to you about in here is IBA. So Indigenous Business Australia runs workshops that also assists startup Indigenous organizations, that covers those things in getting into business, startups, digital marketing, legal matters, tax, blah, blah, blah. You need to go into their website to get the details. And I would encourage you to actually go in there, because you never know what else you can get by way of assistance. Usually most of these things are run by IBA for free. Final thing is the next webinar is about financial literacy, including managing credit, applying for loans, setting a budget, and sticking to it. And that will be scheduled in early 2020. So questions? Maybe what we can do, Ricky, is...
Okay, I've got less a question and more a statement just before I take this off just for the screen and the chats. So while he's answering this, maybe get your questions in the chat, and they'll be ready for, when we can see them. But just on insurance as well, I would be of the belief, and you may or may not notice, so it's a question without notice, that for instance, if you're a physiotherapist, the Australian Physiotherapist Association may well have an insurance package or an insurance relationship, give you rate.
Absolutely.
Yeah.
And that's right. I mean, there are some professional associations that actually have those deals. I'm a chartered accountant, for example, and the Institute of Chartered Accountants in Australia gives me a deal on my insurances. So thanks for bringing that up, Ricky.
All right, there we are. So let's just have a look at any of the questions. Yes, yes, Vicky, we'll absolutely be sharing the PowerPoint, and we'll also share Roehl's more detailed notes, which has a lot of the lists of everything that we need. Just trying to read on the side here. Get the
mouse.
There we go. Okay, that looks like that's the last of the questions. Oh, there we go.